Hello? Can you hear me, ladies and gentlemen? Can you hear me, ladies and gentlemen? Yep, sounds good. It's been a while. It's been a while. Yeah, I know. I know. Isn't it kind of crazy how long it's actually been? One second. I'm kind of getting situated here, you know. It's been a hot minute. I don't even know where I'm at. This over there, do that like that. Something like this. Move this one over here like that. It should be good. It should be good. No, I still do some trading, investing. I mean, a little bit of everything. Honestly, it's just haven't actually been able to stream to YouTube in about a decade. Nor, it's all good. Yeah, no, I'm still here, still working. Where have I been? I have been in the same place I've always been. But again, once they clip you on the old internet, you know, you kind of lose desire a little bit. It's like you work extremely hard, build something, someone comes down and just kind of burns it down. You're like, well, I don't really want to go forth and put in a whole lot of effort there. So, but nonetheless, I got a stream working, so kudos to that. I don't know how long this guy's gonna hang on, but I'm sure we'll probably be able to stream here for probably like a week's time or maybe a couple days time, and then by then they'll probably eliminate me again. But we'll see. But for the time being, I mean, could run over a couple things, right? Right. So I guess we can do that right now. Back on. Um, Again, working on this. It seems to be a kind of a smaller screen here, but yeah. So nonetheless, guys, good afternoon. I don't really hang out too much in our free chat room. Don't really do a lot there. Pretty much just hang out in the elite section where currently Brandon is operating as the lead trader, and I'm kind of putting forth a lot of analysis. But yeah, we just pretty much operate one thing, elite trading, and that's pretty much it. Hang out in sort of a small little community of like 60 of us, and that's pretty much all we do all day. But yeah, nonetheless, so you kind of, I mean, the markets have obviously sold off. This 537 price was pretty much one of our expected downside targets. Um, so this last bounce that you guys are seeing down here at around 537, that's the weekly volume weighted average price of this dip back here. Again, I'm kind of sorry if it doesn't look amazing on this chart, this screens. I'm doing the best I can with what I can do currently. But yeah, so basically, this last dip that you saw here, and this push, and I'll get into that a little bit here in a second. It's the volume weighted average price from this dip in the market. So essentially, this dip tracking the volume weighted average price VWAP of the last dip. It's probably it puts you with support right around 537 or so. So as a result, over like the past week or so, we have gotten this bounce off that 537 price, and I don't know why my mouse is being weird. So this here is that volume weighted average price that we are talking about down there. And actually, real quick, let me go to Twitter here. Get into this guy. Can I just search my own Twitter? 530 BRT targets. 537. I mean, sure, bring up like almost everybody but me. That makes perfect sense. That makes zero sense, but okay. Guess we'll go back to my profile because searching my name and stuff I talk about doing that work. Oh, here's a good one. Yeah, so this is kind of what we're looking for. So this was an email sent out on July 9th. Ultimately, we're going to get to the conclusion portion of this email. Let's zoom in a bit here. Well, that's dumb. I guess Zoom doesn't work like that. Either way, if you guys can see this, it looks like you can see this okay. So this is back on July 9th, pretty much sending out an email concluding that the markets are in uptrends. Everything's pretty much good to go. Everything's fine. There's no starting. The pullbacks haven't started yet. But when they do, we're most likely going to be looking somewhere around 537 to 533. That was on July 9th. Obviously, by the time like 24th or 25th, like the last week rolls around and we go through that big dip, prices updated a bit. But ultimately, we were looking for about 537, 533 on the most recent pullback. I guess I'll read this real quickly for you. Lastly, SPY 537, 533 is the current price target of the market pullback, as in when the market starts to actually sell off a bit and everyone starts to become bearish. Well, we already planned for it here. We expect the next pullback of meaning to drop markets down to about 537, 533. These targets will change as time goes on. That is the target today, which means in the future it won't be 537, 533. It may be 538, 534. As markets go up, our targets adjust accordingly. So that being said, just know that the risk of a meaningful pullback in the market prices near 537 to 533. It was just last week that the markets had come down into 537.24 before getting picked up on this bounce. And ultimately, again, that 537 price is derived by basically going back, taking a look at that long-term weekly scale and using that previous low dip, getting the volume weighted average price of it, and then running it to the upside. Yeah. So, yep, that's that. And so we kind of dialed back on sharing too much of our stuff because every time we share something, it works really good and kind of stops working. But how to is all in the meaning of the words, right? So, nonetheless, you really are all. I mean, yeah, all that good stuff, good stuff. But I think where's our next big dip spot? Let's see. Hold on, I got it somewhere here. Really, already that far back? That's interesting. That shouldn't be. There it is. All right, so I think you guys will be able to see that okay. The prices, yeah, you can see that. That's okay. So pretty much what we're looking at is the next big support zone right now for the market where your risk to reward is more than likely skewed significantly in the long favor will be as the prices and that's actually not true. I was going to say as the prices get to like 528 to 522 ish. Because again, just like that email was sent on July 9th, right? And the price targets were 537 to 533. By July 20, like 4th, as we entered the zone, the price target had updated from 537, 533 or 534 to 540 to 537. So right now, the next big kind of dip zone on the SPY is around 528 to 522. Whenever the market decides to meet whenever that collision happens where price is in that area, it could be 528 to 530, 528 to 532. Again, just depends on how the market performs, and at the day and time, the price collides with what we're looking at. So that being said, currently 528, 522 is a significantly good value spot for you to look to enter long in the S&P 500. That's really just it. As far as like seeking out demand and value ahead of time. Now, we are still, I think, in a short-term sell signal. Kind of. So right now, the market's flirting with the idea of getting trend positive. It's kind of lackluster, though. I'm not really, like, super about it. That's also because we got some good like economic data coming out later this week. And then number two, again, the moving averages, they're just so negatively sloped right now. So that's the thing right here. I'm going to throw a vertical line on the chart. Once I throw a vertical line on the chart, it's going to give a really easy reference point as to what I'm referring to. That's actually Control Z. That's why I was like, that doesn't seem right. Wait, hold up. Control V or Alt V. That's what. Wait, what's going on here? Something's glitching out. There we go. So that vertical line I just added on the chart, that's kind of where you want your eyes to focus for the moment. So you'll see that prior to that vertical line, the market was obviously trend positive over its short-term 50 SMA uptrend, downtrend signal line. And then as you come into like, July 16th or so, 17th, that's where the market flips below and then becomes trend negative. And there was occasional little blip there, yeah, but ultimately trend negative, okay? And then at the same time, if you date back on a lot of your big key stocks, you're going to see that they all transition negatively right about the same time. So now I'm going to take you through a quick little rundown of like Apple. And I probably still have a lot of text on here. Actually, yeah, a lot of the text is still saved from the last week when I was doing all of this. So I'll just hang out on these pages for a little bit. You guys can read the text. There's not like a particular order. So as we go through these different stocks, you'll see some text on the screen. And it really, you don't have to worry about like a particular order that we're going in or what have you, or what dates necessarily come first or last. I mean, it's all important, but you don't have to necessarily worry yourself with that. So again, Apple, controller of markets, enters a sell signal on the same day that the SPY did. So if I go back to the SPY, you're going to see that they're almost near identical patterns. So if you go and read the news over like the past month or so, you've probably been brainwashed with a lot of, oh my gosh, the tech market is selling off, and something like that. And that's entirely true, but it's sort of like a smoke and mirror type thing. So it's true that tech has been selling off and tech's kind of been running the market down, yada yada. But at the same time, there's more to it than that, right? So if you go and read the news, you'll solely believe that the market is going down because tech is selling off. When that is true, but the reality is if you run through all your major players, right? If you read the news, it'll say the market's down because a lot of tech earnings and so on and so forth, right? And now, if you go through your major players like Apple and Amazon and Tesla, right? So let's just go through them real quick, and then I'll continue spieling. Amazon entered a sell signal on July 11th, right? So when the market is going down and things are looking terrible and the indices are down, you're getting news headlines, tech is selling off, and the tech earnings are bad, and the market's sliding, right? And that's all true, right? So on July 11th, Amazon entered a 30-minute sell signal operation. Sometimes they can be better than others. I'm not here to tell you that every time you look at a chart like this and you go into a sell move or a buy move, it's going to be perfect and picture perfect and it makes perfect sense. That's not it. But as we walk through this, the picture should align. It should become clear. Amazon goes into a sell-off on July 11th. That's when the sell signal operation on the short-term scale starts with Amazon. Shortly after that, around July 16th, what happens? The S&P 500 goes into a sell signal. So as your large major cap stocks start to perform poorly, it will soon be reflected into the overall market, either more or less drastic depending on the circumstance. Meta. Same thing, Meta, July 10th, sell signal, July 10th, making Meta, Amazon, Microsoft the Kickstarters or SPY. So Meta, Amazon, and Microsoft are all of the three big major players that went into sell signal operations prior to the date of July 16th. July 16th into 17th is arguably the day the S&P 500 went, right? And I think the NASDAQ as well, but I'm not entirely sure about that one. Microsoft. So look at Microsoft. Microsoft's been a dramatic player for this market. Big player for the market. All the AI stuff juiced up to the puppy, right? Microsoft enters a sell signal move July 11th. Microsoft arguably kickstarted initiated the market sell move. and Apple was the nail in the coffin. All right, so we know Apple's obviously, the golden child, right? So let's go through. And oh, sorry, we have Nvidia here, right? So Nvidia is not necessarily as clean as the rest, but still helping perform. On June 20th, it looks like June 20th, Nvidia topped, went into a short-term sell signal, followed by a short-term buy signal, which resulted in the lower high sequence of the market. So what you had was Nvidia goes into a sell signal, then a short-term buy signal, and that's what creates the lower high scenario that then enters back to a sell signal and you drop out. Okay? So what we have here is Nvidia goes into a sell signal July 15th, prior to the market dropping on July 16th. All right? Netflix is obviously into a sell signal. I didn't write on this one, but it's kind of been a choppier motion. Tesla is kind of doing a little bit of its own thing, but ultimately you'll see that Tesla entered a short-term sell signal back here, but was kind of choppy. All right. Nonetheless, what we're getting at here is that there was a few major players like Apple and Microsoft and Tesla and Nvidia and blah 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 that entered these sell signal operations prior to the date of July 26th, which is when the market, or July 16th, when the market gave way. All right. Now, if we go and look at Apple again, and you read here, Apple again enters a sell signal July 16th. So once all the big major players went and gave way, Apple was the last one, and Apple was the nail in the coffin for the SPY. And the reason I say that is because if you look at the timing and you look at the patterning of both Apple and SPY, they're damn near identical, which they normally are. But ultimately, you can see that when we flip here, this is the date of July 16th. So if you run an arrow right there, that's the date, this is July 17th. My apologies, July 17th. And Apple, ready? So look at July 16th, July 16th, July 17th. Apple breaks down the 30-minute 50 SMA, enters a short-term sell, which then creates that same opportunity for the market that morning. All right. So what we have here is we have a market that's performing pretty poorly in the short term. That's relative, right? And we have a very negatively sloped SMA trend here. Okay, so SMA negatively sloped. The more negatively sloped it is, the harder it is for the market to reverse. Generally, it likes it to be relatively flat or in an uptrend motion for a buy signal operation to work really well. Okay, if we go to, one second. Trading economics here. I'm running trading economics here, just use an economic calendar. Again, let's see, that's Tuesday. Yeah. So Tuesday, you got jolts, bunch of other stuff here. All right, decent. Going to Wednesday. Wednesday, you got some mortgage application, employment costs, pending home sales, etc., crude oil, etc., pretty decent. All right, move into Thursday here. Thursday, labor costs, couple things, ISM, manufacturing, PMI, etc., Gotcha. Friday, government payrolls, etc. Right, so got a bunch of data points coming out later this week, and a lot of those can be driving factors for how this market's going to perform, right? So one may argue that if the data is good and what have you, then the market's going to go through a short-term buy signal or kick back into a buy signal. Or the better way of saying that is if the buy signal is legit, they will manipulate the market up regardless of whether or not the news is good or bad. That's another thing too, is that when markets are in sell signals, the market will just sell down regardless if it's good or bad news kind of thing also. And simultaneously, if the buy signal is legit, generally you're going to start seeing news start to flip positive, which I haven't really checked yet. So anyways, all we're getting at is, as far as the market is concerned, the market hit a good support here at 537. 537 area was a good low-risk opportunity for you to enter into the market long bias. And then from here, you're hoping that the market gains attention over the 50 SMA and then enters a new buy signal. If it doesn't enter a new buy signal, then obviously you're more likely to come back down. Tesla's, all that good stuff, blah, blah, blah. All right. Okay. Now we'll move into Bitcoin, because why not? All right, so Bitcoin, little shitcoin. All right. Basically, Bitcoin just just Bitcoin just go up. Okay. So the last recommended buy for Bitcoin was $54,000. All right. So if we go back to Bitcoin, we're going to go to the weekly chart here. The last suggested, or the last what I see as suggested and good low risk opportunity long was at 54,000. Real quick, let's go back to the old Twitter because the pupper Magoo. Let's see, BRT targets, BTC 54K. Hopefully that brings it up. Of course not. Why would it ever be easy? Never is. All right, so we're just gonna have to go back and find it. Which, wait, I should know how to do that because of the date. When was the date? So the date, daily chart. Hold on. The daily chart would be July. So it's Friday, July 5th. So we got to go back to July 5th here. All right. Yeah, July. How are we still on July 24th? Man, I tweet too much. That's how. Oh, let's see. Hey, Connor, what's up? What's up, Native Gamer, Trader Joe? Where you been at? Yeah, just chilling in my sweatpants at my house. Got VDA selling denial currently $1.40. You agree? I have no idea. Never checked VDVA. Can you give me your thoughts on INTC? I mean, I can give you my thoughts on those. I mean, I'm probably not. I mean, I would have to like sit down and actually look at stuff, and I'm not probably prepared to do that. Again, I mainly follow the S&P 500 these days, along with Bitcoin, and I'm pretty much satisfied with that. Between those two, I'm pretty good at nailing the market and understanding where it's going to go and how it's going to perform. So I feel pretty comfortable just kind of giving people analysis on those things because generally speaking, we're more oftentimes going to be far more correct than wrong on those two asset classes. That's why I generally feel comfortable providing analysis on those on a day to day. Hold on one second. July 23rd. Why are we still in July 20? Because I tweet too goddamn much. I gotta stop doing this. Because every time I try to go find something, it takes forever. And then, of course, Twitter is not the most friendly search. I'll use search very easy. July 18th. Like, holy cow. Let's go. Somewhere. July 16th. Yeet. Absolute yeet. Let's go. Get down there. Pretty much every post you're seeing there is really just guiding you the whole way through on the last Bitcoin bounce, providing each long target on the way up. Okay, here we go. Basically, this is it. Uh, so this is on July 5th. Okay, and we can go back, and it goes back and it shows you that we're going to sell down to 54,000. But anyways, 54,500, 54,000, etc. Sell target is near complete, assuming counter long is about to start. And then obviously that's pretty much it. So there it is. Okay, target is hit. Let's see if it bounced. So basically, this is me back on July 5th, emphasizing that we're supposed to be watching the long on Bitcoin. The grippy is just a fun way of saying the market's going to grip it and rip it, right? So that was back on July 5th, suggesting that 54,000 was going to be our buy point. That was on this last red candle. So this was the last recommended like real long entry, and that's actually incorrect because it was down at 54,000. So this little sliver of a box right there was our suggested short target to long watch back during this drop. All right. So basically now with Bitcoin, really, there's not a whole lot to do other than just watch it long bias for the moment. There's nothing that's triggering a big sell. Sure, there can be pullbacks, but I don't see it currently in a situation that should be going into like some big gigantic sell-off. In the event that ends up occurring, all right, awesome. But I will say this: The really, really, really big buy point right now for Bitcoin is about 40,000 or so. Think Yeah, so right here, July 5th, I've already planned for it. So we posted the announcement on July 5th as a public service announcement. Bitcoin at 37,000 to 38,000. You load the holy grippy and bless your heart, okay? Now that's because that's where you should load the grippy and bless your heart. That's why. And because why wouldn't you trust this puppy if he tells you? Because he's a really adorable, cute dog, and basically that you have to put all your faith into a puppy these days in 2024. We've tried Jim Cramer. That didn't go so well, so now we're taking our tips from a dog on Twitter. Okay. So on July 5th or whenever that was, 37,000, 38,000 is the holy grippy load zone. Now it's getting closer to 40,000. And again, we could maybe, and the reality is we're probably not going to see that retrace for a long time anyways, but the bottom line is I don't control the market, you don't control the market. We just know with pretty good conviction that as the prices reach 38,000, 37,000 slash 40,000 right now, that would be a fantastic buy point, which basically means that's not going to happen. And which basically means in the future at some point it's going to happen. All right, so in the future it could be 45,000. It just depends on how the market performs and how the price targets update and what they are suggested in the future. So right now I can give you estimates, but it's really doesn't really matter until it happens, which is kind of like the other week when we bounced the weekly volume weighted average price on the S&P 500. It was like, on July 9th, it was 537, 534. By July 26th or 24th, it was 540 to 537. So it had updated it updated, potentially $7 over the course of, more like $4 over the course of a month. But yeah, so we could take a quick peek at Intel and Nvidia. So I'm not running standard deviation right now, and I won't be able to run that with you the way that I'm streaming currently, so I do apologize about that. Well, I mean, I guess I could just load it on another screen real quick. Hold on, give me a second. I'm going to load up some statistical stuff. Really, that's just a fancy word of saying I'm going to put a couple lines on my chart. That's going to take a second, but real quick, we'll go over NVIDIA. I'm going to delete this old stuff off, so remove drawing. So basically, what we're looking at with a good old NVIDIA is currently it is in a long-term uptrend. That means the long-term weekly scale is a positive trend market. The weekly positive trend started back here. I'm going to put a vertical line. So the vertical line is emphasizing that the weekly chart is still in a positive uptrend. Generally speaking, you don't have like super negative bearish sell-offs a lot of times, like unless you're below dailies and weeklies anyway. It's more specific to the market, but anyways. So that's where the long-term positive chart is. It's still positive, which basically means like you could just sell all the way down to here and still be positive, right? So you could theoretically see after post-split, you could see Nvidia sell from all the way from $112 to $75, and the Nvidia market would still actually be in an uptrend motion, at least in the weekly scale, right? Now, of course, doing that, you would send many short-term scales into downtrends along the way, but as it sits right now, the long-term scale is actually still positive for Nvidia. Now, kind of getting into slightly more macro, the daily's arguably getting a little bearish below the 50 SMA. But as far as the short term goes, where a lot of short term activity is going to take place, you can see that, like, the hourly chart's not bad to follow and things like that. Because if you're going to do kind of short term trading just in general, you would look at a lot of this short term stuff, right? So if we look at some of this 30-minute stuff on Nvidia, again, you're going to see that back on the date of, what was that? July 15th, Monday, July 15th. Nvidia closed below its 30-minute 50 SMA and got a little negative and started a negative trend. Now you can even see here we had some candles close below it, then go back above it. Again, it's not a perfect system, it's a trend direction system, but ultimately that suggests that if you're below the 50 SMA, that's where the opportunity of selling down becomes more relevant, right? Just like here, break the 50, go down, or you're trending over the 50, go up, break it down, go down, etc., 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 right? There's no perfect system, but there are great guidelines. So Nvidia is currently in a bearish trend as far as it relates to the 30-minute scale, okay? Now you could take this all the way down to go like, or this is a 1 hour, sorry, but same thing with the 30-minute, my apologies. So right, here's your 30-minute chart. Again, my apologies, right? So 30-minute went positive back here, then bearish, then positive right here for just a day. Look at, for just one day, you had Nvidia positive, and that was going to be on that weekly bounce a couple weeks back or whatever, right? So you have Nvidia that goes positive, holds above the 50, it rallies up. Next day, gaps down, breaks the 50, goes bearish. Just today, you had a bounce back to retest the breakdown of the 50. So again, this was the most recent 30-minute 50 SMA breakdown on Nvidia, which would be sending the market a little negative, of course, right? So then you have a little sell-off, bounce, gets the 50 SMA back test, and back down, right? And so this 50 SMA back test is realistically the back test of this breakdown, right? Because again, look at where we broke down, and now look at where the trend is updated to, right there, okay? So you basically just had a consolidation flag sideways into moving average catch-up back to roll, right? Theoretically. How good it performed, you know, that's all in the air type stuff. But that's kind of what's going on with Nvidia. If we look at the 2-hour chart, the 2-hour chart's negative, right? You can see the 2 hours negative. You can see the 3 hours negative, all the way to the 4-hour being negative, and again now the daily is kind of attempting negative, right? So you can kind of see how we're transitioning through all those scales, right? And that's generally what happens. And now, you don't necessarily want to be concerning yourself with like too short term, but you know, the lowest that and that's not even true. I guess that's kind of a false statement. I would go as low, I mean, I go as low as 1 minute charts, but if you're considering like, has like a somewhat serious move started to take place, the 1 and the 5 minute don't really cut it. Minimum, you're going to be like 15, 30 minute. And what I mean by that is if you look at this chart right here, okay, you know, the reality is yes, the 5-minute charts may have moved in here, but this is more of a significant push, right? Like this move here, getting over that 30-minute 50, that's a significant push, right? Getting below this 30-minute 50 SMA, bouncing back, back testing, flirting it, and then dropping out, that's a pretty significant move. The breakdown of this 30-minute 50 SMA and then this sell-off, that's pretty significant, right? Or this little right here, right? Kind of zoom. God damn it, stupid chart. So annoying. It's like, would you just work? All right. So like right here, this one's just like super hard, but this is how they make it, right? They make it super hard, but you know, the reality is here is that on this day, right into the after hour session, a buy signal was started on Nvidia. Sorry to say. So like right here. Right, it's hard. It's really hard to see it, but not hard to see it, but you can see, right? Like, ready? Like, okay, we get positive over the 30-minute. They shake it a bit. Then you're positive over the 30-minute, and then the next day you have a gap up and then a go, and there's your buy signal. And until you get below that 30-minute, you're not going to really go negative. Fast forward, fast forward, fast forward, fast forward, fast forward, fast forward. Take off this highlighter. Take off that highlighter, and then look at, you see this, right? You have this big sell-off. Oh shit, oh shit, oh shit, we're getting below the 50. That could be something like a warning, and then we're kind of holding below it, and all of a sudden, clapped. Booty clapped. All right. So, again, it's not designed to be easy. Algorithms run the market, but there are good guidelines. All right, moving into Intel, because why not? All right, let's move over to Intel. Little InSmell. Again, this is just one portion of tactic. You can use standard deviation, anchored VWAPs, Fibonacci, all sorts of stuff. And yeah, you get the point. So Intel is getting its booty clapped right now, pretty much. Whether you like that or don't like that, that's up to you. But that's the reality of the story here. you know, if we look at, let's see, I don't know, I'm just having fun. So let's see, weekly, where are we at? So the weekly is negative, which is not a good sign. So we just covered how the weekly was positive on Nvidia. This will give you a good representation of the weekly being negative, but you know, still kind of battling previous bullish activity, right? So it's not like either way, right? So you can see weekly went positive, so weekly goes up just like on the 30-minute 50 SMA. Same concept, just bigger scale. So weekly goes positive, and when the weekly went positive, you had multiple 30-minute uptrends and 30-minute downtrends. 30-minute uptrends, 30-minute downtrends, and a bigger weekly uptrend, right? So then what happens here is the weekly is positive, and then what you're going to see is that the 30-minute is going to go negative, sell Intel into a sell signal. That's going to throw the 4-hour negative, then the daily negative, and then daily is going to transition. Generally speaking, I could be wrong on a few of those, but off the top of my head, yes. And that's going to throw the weekly negative. So your weekly goes negative here, and then that's your back test on the weekly. Though it didn't get a perfect tag, you would basically consider that to be a weekly back test and down, right? So what you ended up getting here, ready? So we'll track it from right here. I'm going to put a vertical line, actually I'm going to put a horizontal line right there if I ever get off my highlighter. So I'm going to show you when the weekly went bearish and then how we used a short term, probably 30-minute and 1-hour chart to then run Intel back up positive over like the last month. That just is really a back test on the weekly, okay? So what we're looking at is a bigger term weekly breakdown and weekly back test. But the weekly back test is created on short-term charts going positive. All right, so basically what we're going to do is we're now going to dial down into a daily, all right? So you see where the daily went positive? So I'm going to put a horizontal line here and a vertical line. So Alt V. So this is where the daily goes positive after the weekly breaks down, right? So you can see right where the daily starts to transition, right? And prior to that, we probably get like 30 minutes and stuff like that. So look, you can see 4 hours kind of chopping, blah, 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 blah. 30 minute, cool. All right, so now we're going to get into a 30-minute. So what ends up happening is you get the weekly to go bearish, and after the weekly goes bearish, what you start doing is you start putting in these small 30-minute uptrends. Gets over the 50, pops a bit, gets over the 30, pops a bit, and now you're starting to kind of create some bottoms and small uptrends that ultimately lead into kind of a base, right? Fast forward a bit, you're getting what? 30-minute uptrends, small 30-minute uptrend pops, 30-minute uptrend pops, 30-minute uptrend pops. So you're getting these bases building on short-term uptrends, which eventually lead to the daily chart catching up and the 4-hour chart catching up. Once the daily chart catches up, sorry, I get over here, and this could have been accompanied by some other things, but as far as the moving averages are concerned, you can see all those little 30-minute long-term or short-term pops, base the market, yada yada, and eventually clear your daily. Your daily chart's a bigger moving average, so it sends it into a bigger uptrend push, which ultimately is a back test of, yeah. And I can take you over to the VIX. The VIX is a perfect example of all of this. So just over the past week, you guys saw the market pull back and things started getting a little scary. And then someone on Twitter tried to sell you on some fear mongering. Oh my God, the world's gonna end. Oh. Right? And then some dude on TikTok's like, oh, this is the one. The market's gonna go down for a decade. Right? And then CNBC was there to tell you none of it ahead of time. Figures, right? But there was a lot of signs on the VIX that was telling you this. And yes, I'll say right now, if we go back to the Twitter page, there was a whole thread about this. Hey guys, the VIX and the 1 hour and da 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 da. And this could be leading to a significant pullback. So now what we're going to do is we're going to dive into the VIX. And the whole purpose of us diving into the VIX is pretty much to show you the same thing, the transitioning through longer term uptrend starts to short term starts, right? So basically what we got here is we're going to go to the weekly chart. Let's start at the weekly chart. All right, so the weekly level is right here. I'm going to put a horizontal line there. So that's the weekly level. I'm going to go to the daily now. So I'm going to go to the daily. The daily is right here, which I'm going to start with a vertical line, Alt V. All right. So, and I'll put the level there too. That's fine. Alt wait, hold up. Do this right there. Okay. So, and we could even look at the 4 hour, but it's about the same. Now let's go to a 30-minute. All right, so we're going to go to a 30-minute chart on the VIX. All right. Remember that the vertical line 1 is the daily, and vertical line 2 would be the weekly, but I'll just make the upper yellow. But you also got it. Well, you kind of know where it broke out. I mean, everyone knows that, right? So I'm going to make this green. And yeah, that's good. All right, so what we want to look at here, and I gotta emphasize something else too. This is kind of important. This was right here was leading into CPI, I believe, right around this date. So we're gonna do this, put this like that, and we're gonna put this little text here. So this box was, I think it was CPI. It could have been like some Fed speak stuff. I kind of forget. Again, when you're looking at the market, it's kind of hard to remember every single news event. But I'm pretty sure it was like some CPI stuff or whatever. I think it was CPI. Anyway, it's definitely got to be CPI. It was 100. It's got to be. I'm not looking at the dates. I could figure it out, but okay. So we're just gonna call that box a CPI, even if it wasn't, but it was anyway. Yeah, you get the point. All right. So CPI, basically, what's gonna happen is you're going to during CPI weeks, you're generally going to see the VIX go into an uptrend, regardless if the market is supposed to sell off or not. It's the VIX signaling to everyone that has a brain that it's just up, knowing that CPI or say FOMC is just a day or two around the corner, because those are volatile events. Regardless if it's negative or positive outcome, there's volatility to be had or expected, right? So if you know that generally during these events volatility is increased and the market moves more, then no shit, the VIX is going to be positively uptrending or signaling increased volatility, because duh. That's like me coming on live television and saying there's going to be a nuclear attack tomorrow. Well, obviously the VIX is going to go up. I mean, duh, right? So if we know that CPI, which is generally a volatile event, or FOMC, which is generally a volatile event, is going to be coming up in 2 days, then duh, the VIX is probably going up. So on weeks of expected volatility events, it is very normal to have divergence amongst indices like the SPY or QQQ and, say, the volatility index. That answers the questions for many, which is, why is the VIX going up but the market not going down? Many times that can actually be contributed to the fact it's a CPI week or a volatile week, where yes, volatility should be increasing in preparation, but not necessarily being a 1-to-1 ratio of VIX going up and market going down type scenario. So just the other week leading into all this before the market drop, what you had is you had the VIX obviously uptrending because we're leading into a volatile event. The volatile event being CPI, right? Whatever, data's not bad or whatever. Basically, the VIX stayed positive and the market ended up going down, right? But see, what happened was leading into the event, you can see this short-term uptrend start. Look at the market get positive on the 30. So it gets positive on the 30, and where I'm increasing this box, you can see we create a bull flag over the 30-minute. So again, I'm going to show you. So again, the box down here, this is negative, right? And then we flip positive and create a bull flag over the 50, leading into CPI or whatever the hell it was, and then it breaks out and yeah, right? And then you can see it actually goes negative. This was really just a false breakdown to basically trap everyone just to relaunch long, right? And so then the same thing happens, right? So it was negative, and then we flip back to positive, create a bull flag over the 50 SMA on a new buy move. Again, that's a new buy signal on the 30-minute. Just getting over that 50 SMA creates a new buy signal on the 30-minute, which leads to a bull flag, which leads to a gap and go, which, remember this vertical line? That vertical line's the daily 50 SMA. So this little green box where this bull flag's getting created, that was on the same day that the VIX starts to get positive over that, or maybe the second day or whatever. But you can see we start to transition over that daily 50 SMA. So you had a 30-minute short-term go positive, which then leads to the daily chart finally breaching its 50 SMA. So now the daily chart is becoming positive trend positive. The daily chart trend positive is a big catalyst. That basically sends the market where? To that green line. What's that green line? That green line's the weekly 50 SMA. The weekly 50 SMA is priced at 1432. So what you end up getting is you get short-term volatile trend into CPI, whatever data, results in a short-term 30-minute buy signal that breaks out the daily. The daily breaks out, runs weekly, weekly breaks out, and then as a result, what do you get? You get the market getting spanked over the past couple weeks and everyone going, oh my God, the world is over. Right? And meanwhile, yeah, so anyways, that's that. Yeah, so hopefully that made a bunch of sense to you guys. Cheers, brothers. Cheers. I like how no one liked the video or the stream yet. Cheers to you guys. You're sick. No, I'm kidding. Doesn't really matter. Yeah, so like I said, basically you shouldn't even be bearish the market anymore. As far as the 30-minute trend goes, the 30-minute trend's starting to get positive and it's starting to flatten out a little bit. So basically the SPY is kind of starting a little bit of a buy move. So you really shouldn't be bearish. The SPX has been trying to do a buy move for a little bit earlier. We got to check the NASDAQ because, again, tech is leading the sell, so we really want to see that the NASDAQ is getting trend positive. You can see that the NASDAQ is like just barely getting through that 50 SMA there. So, you know, if we go back to about there, you're going to see it's just barely starting to get positive. So this little green line right here. So this green line now on the 1 minute, right there. So right here is where the 30-minute just started going positive on that short-term kind of signaling of the NASDAQ, right? So realistically, you could be long here with the stop, you know, somewhere below like, you know, 463. I'm not saying it's a great one. I still really don't like it. But it's just to kind of emphasize the point of how detailed you can and kind of do need to watch the market. You know, just like this earlier, right? So here, watch this. So earlier today, we did a back test of the 50 SMA. So remember, right? The Nasdaq went bearish. Nasdaq is, well, I mean, if this would ever work, that'd be great. So Nasdaq is bearish below the 50 SMA, right? Breaks down, and then it back tests it here. So naturally, as the market is back testing the 50 SMA for the first time since the breakdown, you're not generally thinking it's going to break it out. You would normally be thinking resistance. And then number two, if you look at how steep that moving average is, right? So so again, market breaks down, retraces to SMA trend resistance while the SMA is, you know, steeper than a double black diamond at your local snowboard hill, which probably isn't too big. But no, seriously, it's sloped like a double black diamond, right? First tag, the rule is you don't think breakout, you think bearish, right? So if we go and look at that exact price point on the NASDAQ this morning, where did the market top out today, right? It topped out on pretty much exactly that price. Now, there's multiple reasons why it could have done this or done that and blah, 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 yada, 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 you know, whatever, right? But ultimately, what you had right here this morning on the NASDAQ, which, yes, we did suggest in our chat, not that I'm saying you did, just again, it's you know, this is, nothing is hidden, right? It's all there. So this was the QQQ 30-minute bearish trend back test, all right? Now, you know, most kids have no clue that it even exists, so they're probably, you know, a ton of them are just longing highs, looking for whatever, and just have no idea we're coming into resistance anyways, right? So what we end up getting is we end up getting that 30-minute back test, right, of trend. Now, something else that we would end up doing is once we get the 30-minute back test of the bearish trend, we also use some different tactics like on the 1 minute. So once the market comes up and the NASDAQ gets bearish off that 30-minute, you can see it creates a reversal. Ready? So look at the market. 1 second. So you see how we're kind of going up. It's all positive, right? Higher low, higher highs, hits 30-minute trend resistance, and then it breaks down and starts bearish, right? Number two, once we get such bearish rejections, we do like to track the players. So, for example, here's a little bit of a big one for you. This is pretty cool shit. So once we know that, like, for example, the 30-minute trend has been back tested, we'll start to track the volume weighted average price of that specific signal and rejection. Since we think that if the market's below it, it's bearish, and we come up and reject it, market's going to stay bearish, we're then starting to track the new bearish volume selling move of such rejection. And if you look at the 1 minute scale, again, that 1 minute scale would basically say, as long as the market is below the 1 minute green, and I'll change this to, I'm going to change this VWAP to yellow. So we're going to change this to yellow. This is basically one of my own strategies I created, which I'm giving to you, so whatever, but have fun with it. So anyways, here's a 1 minute volume weighted average bearish price strategy in relationship to 30-minute trend signaling and tests. So what we have on the high of day today is we have a 30-minute rejection on the NASDAQ market. From there, we start tracking the 1 minute volume weighted average price trend, or players of such rejection, which basically says anyone that got short on the highs, the lows, or got long for the day, whatever, blah, 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 on these rejections, their average price is this yellow line. And as long as the market's below that, we're not going to do a reversal squeeze long. So we can trade bearish as long as we're below. And obviously, if it gets too extended, you got to be careful, and there's other rules and blah, blah, blah. But the main concept is, if the market is going to stay bearish in the immediate, after that rejection, it needs to maintain below at least the 1 minute trend. If the 1 minute trend starts to give up, that tells me the intraday bearish trend is flipping, or it's already begun flipping and whatever, right? So you can see the perfect rejections right around the volume weighted average price, sends it into a sell move, and then obviously as you creep through it, that's where you start squeezing that move out a little bit more, right? So you can see that right there. And I can show you the same thing with SPY. Same thing with the SPY today. So 1 second, I'll take you over to the SPY. Let's go to the 30-minute real quick. I'm going to delete all this old stuff. Boom, 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 somewhere, again, somewhere. Yeah, so I'm not saying that, everything is super easy and breezy all the time, right? So we kind of flirted a little bit here with the 50 SMA, going over to the 50 SMA, but anyways, bottom line, get into the chart here. This green line is going to emphasize where the start and that kind of breakdown of the 50 SMA kind of started today. So we really started to break down the 50 SMA. It's actually wrong. It's like right there. All right. So right here, this high. So we're going to go like this. We're going to take this bad boy. We're going to anchor this high right there. We're going to take this bad boy and we're going to anchor this high right here. All right. So pretty much like that. All right. So we actually run it a little differently. We do the breakdown candle anyway. So these two yellow lines that I put on the chart, ultimately that would be the, so 1 second. So this is like over the 50 SMA right here, and then it breaks down and back tests the 50 SMA and starts to sell away from it, right? So this was basically the SPY kind of getting over the 50 SMA, waiting for the NASDAQ to bump its head. NASDAQ bumped its head, helps send the SPY back down, breaks down the 50 SMA, etc., right? And then we go into a bearish move here on the intra-scale. Now, as we said before, as long as the market is below the 1 minute bearish trend of such rejection, the market's not going to do a reversal squeeze. Once you get through the yellow, there's your reversal squeeze. Because effectively, everyone who started participating, hold on 1 second, everyone who started participating here, bearish, really, like right there, bearish, those are all the people participating on the 30-minute SMA, SPY, system, sell signal, blah, 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 blah. So there was people who just started getting short into the market here that I know of, just based off of simple SMA rules. Not only people, but algorithms, hedge funds, banks, all that good stuff. They follow this stuff too. So long story short, we know that about, what time was that? 10, that was like 10:47 or so today. S&P 500 goes negative below the 30-minute. That sends it into a bearish trend. That bearish trend is going to last for as long as it wants, at least minimum until the 1 minute trend is taken out. If so, we're going to reset the long usually, which, as you can see, is a result right somewhere there. Okay. So that's a lot to throw at you. But anyways, a couple cool things. But yeah, I'm going to look at the chat. I haven't looked at it in a hot minute here. Yeah, hedged hog. Yeah, nobody knows nothing. Literally not nada. No one knows a thing. I know nothing. You know nothing. We know nothing. Google doesn't even know that president. We're not even gonna go there. They've already censored me enough. But you know the deal. El Goog, good old El Goog. It's still it's just comical. It is just comical. But anyways, good stuff, right? Good stuff, peoples. So what time is it? 3:50. Market's about to close. Yeah, I guess we'll end it there. Maybe I'll pop on a stream here in the afternoon tomorrow or something like that. Also, we'll see. I don't know. I might just start operating free live streams for everyone, just like we kind of did on YouTube, but on our new website. So it's possible that we're just going to migrate streams like this to our new website. Um, and just ideally start pulling people hopefully away from these platforms a little bit, because they're not really helping us anyways. I had to go through some finagly shit just to get this stream to work today. So anyways, but yeah, we might introduce some streams onto our website for free and just kind of hopefully create like a schedule out of it, so maybe you guys will tune in there for some of the stuff, because I do really enjoy streaming and sharing a bunch of stuff, without pay and all that good stuff, and without having to advertise different brokers and all that stuff that the industry loves for people to sign up for. So, you know, anyways, I guess I'm just not the best pawn in the system anymore. So, with that being said, I'll catch you guys later. I'll give you guys some updates here or there. Always appreciate you guys tuning in, and I'll catch you guys later. It's been a hot minute since I've done this. There we go.